Good afternoon. My name is Linda Schenk and I'm the Executive Officer for Wine Communicators of Australia. Welcome to our first webinar for 2020. Today I would like to introduce Angelica Crabb, who's an analyst for Wine Australia Markets Insight team. Angelica will reveal the latest results for Australian wine exports in 2019, including the latest trends by destination, price, segment, and wine style. Plus, we have an exciting addition to our webinar today. We have Anita Potter here. Anita's rolling her eyes at the thought of being exciting. I think you're exciting, Anita. And she's the Corporate Affairs Manager at Wine Australia, and Anita will be giving us an update on the fires. Both the presentations today will be taking questions throughout, so please find the button at the bottom of your screen. It says Q&A at the base of your screen, and type the questions through as you think of them. When they come through, I'll be asking the questions of Angelica or Anita, and then we'll answer them as best we possibly can. As usual, this webinar will be recorded, and a link to this recording will be sent to you post the presentation, for you to watch it again at a later stage. But it's my pleasure now to hand you over to Angelica. Thank you.
Hello, everyone. As Linda mentioned, I am an analyst in the Market Insights team at Wine Australia. And today I will be doing a review of our export performance in 2019. So here we go. So today I am going to cover the global market forces at play at the moment, because we work in a global economy. I'll also be going over our domestic supply situation and how that's affecting our exports. Then I'll be going through our export performance in 2019. I'll be going through the trends by container type, wine style, region, variety, price segment, etc. And then I'll be doing a little bit of analysis on trends by exporter size to finish off. So starting off, I will be talking about global wine supply and demand and what the situation is at the moment. So in 2017, some of you might remember the global harvest was the lowest it had been in over 50 years. However, Australia had one of its biggest vintages on record, so we were able to take advantage of the wine shortage globally, and I will cover that in more detail in a second. However, in 2018, this decline was reversed, and the big three, Italy, France, Spain, as you can see on the screen here, had large harvests, while Australia's supply declined. This caused an increase in competitive pressure in the global wine market, and has had an impact on our exports in 2019. However, for the global wine production in 2019, the estimates for that, and they're still estimates, is that supply is going to be average again, meaning that supply is predicted to be much closer to demand and easing some of that pressure. And demand, as you can see by the red line there, has been relatively stable over the last decade. So this chart here is looking at the volume and value of global wine sales over time. And global wine sales growth is slowing while volume has dropped by 2% in 2018. 2019 data won't be available until later this year. So what's happening there is that consumers are consuming less alcohol, but when they do consume, they tend to spend a bit more as a treat for themselves. So that's that premiumization trend, health and wellness trends. For many of the top wine consuming countries, including the UK, Spain, and France, per capita wine consumption has been in long-term decline. And a few markets, including the US, Italy, and Canada, they've actually seen growth in that measure. Looking at the Asian markets, they consume a lot less wine per capita than the Western markets do. Although they are growing in percentage terms, this is still really low. If you look at China, they consume about 2 liters per person a year, whereas in Australia, that's about 24 liters per person a year. So it's a big difference there. Moving on to our vintages. This chart shows our vintages over the last 1.5 decades. And it shows that the 2017 vintage was well above average, and 2018 and 19 had been slightly below average. So this is having an effect on the volume of our exports as that volume cycles through. So if you have any questions on global forces, maybe start thinking of those questions now. I'll just wrap up this section by saying that so the 2019 global vintage was closer to average, which is easing that competitive pressure we saw from the 2018 vintage. Positively, the Australian dollar is still relatively low compared to other currencies, which is good for us being an export commodity. And then emerging markets are slowly adopting wine into their culture, like China, Japan, South Korea. However, GDP growth rates are declining around the world, meaning there's less wealth around to buy things like wine. Global alcohol consumption is in decline, as I mentioned. Per capita consumption rates of wine are declining in the developed markets. Other alcohol products are competing with wines, such as craft beer and spirits, and also non-alcoholic beverages are starting to take share as well. Looking at generations, millennials are the largest consumer group, but they have very low discretionary income when you compare them to other generations at that same age. And older wine consumers are now on restricted incomes, which means they're not spending as much on wine either. So before we move on to how we did with our exports, are there any questions?
There is a question. It says our China buyers are in lockdown and can't see there will be any clear air till the mid-2020. This being the case, it'll take pressure off of demand. And so do you believe there'll be a surplus again?
At the moment, it's still too early to tell what coronavirus is going to do for our exports and basically consumption in China in general. I was going to talk about this in the China section, but I'll just say for now that, yeah, one is still too early to tell. In China, there is a lack of data. So we do think that there will be some sort of impact for our exports, but we don't know the extent of what that's going to be. And the lack of data, sales data, makes that really hard to predict the size of that impact. And at the moment, our focus is the health and well-being and welfare of our staff and those in the industry working in China. So we don't, at the moment, know the business impact, but it's highly likely that there will be one. So,
great. There's no other questions come through.
Okay. So how did we do in the last year? In the 2019 calendar year, the value of Australian wine exports increased by 3% to 2.91 billion, and volume decreased by 12% to 744 million litres, which is about 83 million 9-litre cases. Value increased for the 6th consecutive year and was the second highest on record for a calendar year. While the volume decline was significant, the decline is heavily weighted towards the lower price segments, and I'll show you more about that in a second. Furthermore, this comes after a record volume of exports in 2018, which followed a record Australian wine grape harvest in 2017, as I showed you before. So there was less wine available for export in 2019 because of the lower vintages, and that we've already drawn down on a lot of our inventory as there was higher demand for wine in 2018. So looking at average value here, so overall value growth has been able to be maintained due to a growth in the average value of exports. So the average value of exported wine increased by 18% to $3.91 per litre FOB, which is the highest level since 2006. This chart here on the screen shows the split between bottled and unpackaged average value. Bottled average value increased by 13% to a record value of $7.04. For unpackaged wine, average value also increased year on year by 6% to $1.24. Now this chart here represents the vintage share of exports in a calendar year. For instance, if you look at 2019, they were made up of 25% 2019 vintage, 51% 2018 vintage, and 11% 2017 vintage. So you can see here that the trend is that most of the sales from a vintage happen in the year after, the calendar year after. So as I mentioned before, 2018 was a record year of exports for us, and you can see that on this chart. In fact, at 849 million litres, it was 13% larger than the 10-year average of 750 million litres. So due to the high demand of wine overseas, due to the small 2017 global vintage, and Australia having a large 2017 vintage, we took advantage of this and we shipped a record amount. So the stars all aligned to get that record for us. Now you can see the 2017 vintage is the yellow blocks on this chart. And because it was so big, it has subsequently had a much higher share of the last 3 years of exports compared with other vintages in their respective years. So this is now starting to wash out of the figures, and with 2 smaller vintages for 2018 and 19, our volume of exports has declined. So now looking at the volume of exports over time by container type. So local supply pressures are causing a decline in volume of both unpackaged and bottled wine. However, this decline is stronger for unpackaged wine, given the competitive nature of the commercial wine market. The OIV reported that the volume of global wine production increased by 4.4 billion litres in 2018, which has caused a lot of competitive pressure. There's a lot of bulk wine around. So the world is not in need of as much from us, and we have less of it. So the decline in volume of glass bottle exports is less apparent due to the growth of exports at the premium end of the market. Just looking again, last slide on volume, just looking now by price segment, and you can see consistent with the decline in unpackaged wine, if you look at the volume decline by price segment, it's almost entirely in exports below $2.50 per litre. Exports above $10 per litre are in growth, consistent with developed wine markets all over the world where the premium end of the market is growing, and while the commercial end drops off. And this is amplified this year because we have less supply. Now moving to value by price segment. This is a shot of our longer term trend, our price profile by price segment. And you can see how it's changed since 2013. And there is more value at every price segment than when you compare it to 2013. The above $10 price segment is now our largest by value, as opposed to the $2.50 to $4.99 segment, which has dominated for a long time previously. Now looking at, this is a snapshot of how the current landscape looks by exporter size. In 2019, there were 2,903 Australian wine exporters. 91% of these exporters shipped less than 10,000 9-litre cases, while 2% shipped more than 100,000 9-litre cases. However, these large exporters made up 72% of the value of exports, while the smallest exporters contributed 16% of the value of exports. Looking at the chart on the right, these are the growth rates by volume and value for each exporter size group. As you can see, all groups have declined in volume, with the largest exporters being hit the hardest, which makes sense since they are more likely to operate in the bulk wine market. The smallest exporters have performed very well in value, up by 26%. This is just a quick one on wine style. So if you look at the value growth by wine style, it indicates that most of the value growth has been in red wine. And this is not surprising given the markets where export value is currently growing. And I'll get to that in a second. So these next couple slides are only looking at packaged wine. I just wanted to note that. And so consistent with the slide before this, Shiraz, Cabernet Sauvignon, and their blends are showing very strong growth, while results are really mixed for the white varieties. Chardonnay managed slight value growth, as did Pinot Gris, while Sauvignon Blanc, Pinot Grigio, and Riesling all declined. So this is by value and label claims. Going to regional label claims, it was a great year for wines labeled with South Australia, Barossa, Barossa Valley, Coonawarra, and Margaret River. Southeastern Australia label claims continued their decline, while it was also a tough year for McLaren Vale, Limestone Coast, Adelaide Hills, and Western Australia label claims. Now, where is the wine going? As has been the case in the last few years, Northeast Asia has been the growth center for Australian wine exports. In the last 5 years, the region has grown on average 28% per year in value. In the last year, it grew by 11%, as you can see on the screen, and the biggest market in that region is China. Southeast Asia also had a great year, importing 17% more Australian wine than in 2018. Now, North America and Europe are challenging at the moment, to say the least. In North America, competitive pressures from other beverages and other wine-producing nations are causing volume and value to decline. In Europe, the decline is mostly due to uncertainty around Brexit. Looking closer at our top markets by volume and value. China continued to be our #1 market by value and by a fair long way, and is continuing to grow. The US declined slightly, but this was mostly in commercial wine, which meant that volume dropped a lot more than value did, while the UK and Canada continued to struggle. Singapore has jumped into the top 5 for the first time, which is great to see, experiencing a significant increase in value by 18%. Looking over at volume, the UK, even with its struggles at the moment, is still our #1 market by volume. Over 80% of the wine shipped to this market is in bulk packaging and bottled in market, which is why there's such a discrepancy between its standing in volume and value terms. Consistent with the overall volume decline that I've already covered, almost every market in the top 10 for volume has declined. Now, the next few slides, I'm just going to focus on China, #1 market by value. After the austerity measures put a dampener on things in 2013 and 14, the China-Australia Free Trade Agreement, which came into force in late 2015, accelerated the growth and demand for Australian wine in China. In the last couple of years, the low end of the market has really fallen away quite dramatically, as you can see by the dip in the volume line, which is a green line on your screen. Exports below 250 per litre FOB have declined by 63% in volume in the past year. However, due to the growth in premium wine, value has kept increasing. Exports with an average value above $10 increased by 17% in volume. Now, just looking at China exports by exporter size, all exporter size segments are growing in value. Almost all are declining in volume. This is especially apparent for large exporters who are more likely to be exporting unpackaged wine at lower price segments. The smallest exporters, those shipping less than 10,000 cases, have experienced the highest percentage change in value. However, we really must note here that not all of these exporters are levy payers or wine producers. In fact, volume exported to China, 60% of it is by non-wine producers. So you really just have to take that into consideration when you're looking at these numbers. Looking at imports into China. Good news is that in August 2019, Australia took over France as the #1 imported source of wine and solidified this position in the last months of 2019. This is thanks to Australia's long-term trend of growth and coupled with France's decline in the last 12 months. Chile still holds the #1 position by volume due to its place as #1 for unpackaged imports. And then looking at how Chinese consumers see Australian wine, this is wine intelligence data, and Australian wine is highly regarded in China. Chinese upper middle class imported wine drinkers give Australia a score of 8.56 in quality out of 10, which is the highest score of any of our key markets. We are also ranked 4th in the quality perceptions in market after France, Chile, and Italy. Australia ranks highly in having brands that I recognize, great varieties that I like, having good value for money wines, and having a wide variety of wines available. Now, although expensive/fine wines is ranked lower with 74% of the population marking us as that, this is much higher than any of our other key markets. So that's a really positive thing. This is a SWOT analysis we have done on the China market, and this is available, as well as a lot of this other information is available in our market insight report on the website for levy payers. And as you can see here, the strengths include the current FTA, high quality perceptions of Australian wine, and favorable exchange rates. There's still a lot of opportunity in China, with 430 million urban wine consumers, but only 52 million currently drink imported wine. There's also many different ways to enter the market, with e-commerce channels growing. Wine's current weakness in this market is that consumers are still relatively uneducated about wine, and they still consume very little of it compared to Western nations and other alcoholic beverages like baijiu. Now, under threats, we have to acknowledge the last point, which is that it's a fast-changing environment, and I've already kind of covered the current situation with coronavirus there. So I will just move on to the US.
And before you do that,
yes?
I've got a couple of questions on China.
Yeah, that's fine.
There's 2 questions around the same topic, and that was, do you know what has driven the growth in Singapore?
No, actually, not off the top of my head. Yeah, we can take that away and have a look at it. I just know that, the value has grown considerably there, whereas volume, I think the 5th market used to be New Zealand, that has declined quite a bit. You have to keep in mind with Singapore is that it's really a trading hub. So a lot of the wine may not stay there in Singapore. So it could be some volume diverted from another trading hub like Hong Kong, something like that, but still good to see. And it is a very high value market, but it's important to keep in mind there as well that it's got very high taxes. So that gets, you have to keep that in mind as well.
Okay. The other question is, can you please clarify what you mean by non-wine producers exporting to China?
Yeah. So when it comes to exporters, you've got your producers that produce wine, and then you've got your exporters who they buy wine and then they export it. So they still pay, they pay an export license, they pay per product, all of that, but they don't actually produce wine, so they don't pay the wine grapes levy and the wine production levies. So that's the definitions there. And that's been on the increase in the last few years to China, and mostly to China. So.
Okay. That's all for now.
Okay, great. So the US, now looking at the long-term trend there. So since the GFC, Australian wine has really struggled to break through in the US market. And in the last few years, value has stabilized, which has been good to see. Volume results have been more mixed, and especially in the last couple of years, because the US is struggling with an oversupply situation and is not in need of Australian bulk wine at the moment because they've got plenty over there. So exports, by looking at $10 per litre and above, these have gradually increased since 2011. This segment of our exports has grown by an average 8% per year in the last 5 years. This is consistent with the US total market declining on the commercial end and growing on the premium end. If you look at IRI figures for the year ended December 2019, these show that sales below US $11 per bottle declined by 5%, while sales at US above $11 and above per bottle grew by 7%. So looking at growth rates by exporter size, unfortunately, you see the challenge in breaking through in this market. Almost all segments are down in volume, while all are also down, but slightly less in percentage terms in value. So looking at imports, Italy and France dominate in this space, while New Zealand is showing good growth, but off a very small base. In November last year, 25% tariffs were introduced on European wines, although significantly, this left out Italian wines. By all reports, this has already had an impact on imports of French and German wines at the end of 2019. There's also a proposal to inflict 100% tariffs on all European wines, but this has yet to come into effect, and it's still uncertain whether it will. However, it's already having an effect on the market, with importers and distributors having to review their product mix in their portfolios. So it's still unclear whether this will be a positive for Australian wine or not. So now I'll just go through a few headwinds and tailwinds in the US market. So looking at the bottom left-hand corner, this is wine consumption broken up into groups among US adults. And first of all, the bottom, 25% of the population drinks no alcohol at all. And 26% do drink alcohol, but not wine. And that means over half the population has no relationship with wine. While this makes it difficult to break through to the large population in the US, it also presents an untapped opportunity if you can reach these people. Secondly, the top chart in the middle, the US market currently has a glut of domestic wine, with domestic grape production on a long-term increasing trend, and demand for wine has been leveling off. So this is causing increased competition in the commercial end of the market, meaning there's less demand for Australian wine in these price points, which is where we have historically played. Third, looking at the chart on the right-hand side bottom, other alcoholic beverages, in particular spirits and mixed drinks, such as hard seltzers, are taking share away from wine. These beverages have done a really excellent job appealing to younger generations and the health and wellness trends, as well as offering Instagrammable experiences when you think of cocktails and things like that. However, there are still tailwinds in the US market. There's a lot of opportunity still because it's so large. There are still wine styles that are finding growth, such as rosé and sparkling wine, off of smaller bases, of course. The chart on the left is just distributor depletion data, which is courtesy of SipSource. Again, traditional styles are declining, but these are mostly on the commercial end when you look at the table, red wine and white wine. The chart on the right shows the potential that the US market holds. Imports are over 25% of volume, and over 200 million 9-liter cases are consumed in total. 40% of this market is premium, sold at more, which we define as sold as more than US $10 per bottle. And the growth rate in this end of the market is just over 4%. So it still has enormous amount of potential for those willing to tackle those headwinds. Just going quickly to the UK and Canada, very difficult conditions at the moment. And so looking at, first on the left-hand side at the UK, at the long-term trend, you can see that between 2007 and 2010, there was a massive shift in how wine was exported to the UK. So larger brands started to export unpackaged wine in bulk containers. This shifted the FOB value of those shipments down, as they no longer included packaging costs. Since 2011, however, value has stabilized. But the entire market has been in flux since the Brexit referendum in 2016. This has caused much uncertainty and also created a bump in exports in 2018, as you can see on the chart there. That was when exporters were stockpiling in market in preparation for what might happen when Brexit was finalized. However, since Brexit was not finalized until January 2020, this meant that exports in 2019 declined dramatically because stock was already there. This market is currently in a bit of a wait and see pattern. as we see what negotiations for trade deals are now in the works. And there is still potential for a no-deal Brexit if there's no trade deals reached by the end of the year. Looking quickly at Canada on the right-hand side, they also experienced a big year in 2018. You can see the spike there, and that was due to the availability of supply for us and this market being heavily weighted to the commercial end. In 2019, however, wine is facing strong competition from other beverages such as hard sodas and seltzers, spirits, and cider. This is affecting all wine sources, not just us Australians. So the next, to finish off, the next few slides are just going to be on trends by exporter size, so small versus large. I've split exporters into large exporters, so more than 50,000 cases, and small exporters, less than 50,000 cases. And for the next few charts, large exporters are orange and small are green. So this first one is exporter performance by destination market. As you can see, for the most part, there are very similar trends for large and small exporters. Both groups are growing in China, Singapore, Denmark, United Arab Emirates, and Malaysia. However, everyone seems to be struggling when it comes to the US, UK, Canada, and Japan. Of these top markets, the only real diversions of trends are for Hong Kong and Taiwan. For Hong Kong, this may be due to the difficulties with the political turmoil at the moment. Overall volume of value hasn't really changed, but shown by this data here, possibly the smaller exporters might be putting volume somewhere else. Now, looking at by wine style. So smaller exporters are growing in every style by value. Significantly smaller producers are exporting more white and sparkling wines, while large producers are exporting less. And consistent with this, this is by varietal label claim. So again, only packaged wine. All exporters are shipping more in value in Shiraz and Cab Sav. This is consistent with the previous slide because smaller exporters are shipping more Chardonnay, Sauvignon Blanc, Semillon, and Viognier, while large exporters are declining in these varieties. Interestingly, the label claim of just Cabernet and the blends of Cabernet has seen tremendous growth for both groups. Larger exporters have also increased their exports of Prosecco, while small exporters have shipped less. And then moving to regional label claim, the larger, more often used claims, so towards the left-hand side of your screen, have very similar trends based on exporter size. So exporters are moving away from the packaged Southeastern Australia label claim, while labels for South Australia, Barossa Valley, Coonawarra, and Margaret River are growing for both groups. McLaren Vale is in decline for both large and small, unfortunately. Interestingly, there are some very different trends going on in smaller label claims. While smaller exporters are shipping more Victoria, Adelaide Hills, Heathcote, and Eden Valley, the largest exporters are declining in these claims. And finally, I did some analysis on the net change of exporters to markets. In other words, this is the difference between the number of exporters entering the market versus those leaving. And I need to note for this chart that I have excluded mainland China because there was a net change in exporters of over 300 in the last 12 months. So it was literally off the charts. So I've excluded them for this. And I found this piece of analysis really interesting because it shows you which markets are experiencing the highest net change, and it shows you that some exporters really indeed are branching out to new markets in order to diversify. So you can see here that Japan, Denmark, Malaysia, Taiwan, and Poland all had positive changes. South Korea was the outstanding performer with a net change of 30 exporters. It also shows you that although the growth rates for the US for volume and value weren't great, they actually had a positive net change this year. So there were actually more exporters entering the market than leaving the market. It also shows you that India, which has a lot of hype and buzz around it, is not yet a market that exporters are moving to in droves. So in summary, there's a lot of global market forces as well as domestic supply constraints, which are having an effect on the volume of our exports. However, value is still holding up. So 2019 was the second largest calendar year on record. As a result, and that was as a result of the average value of exports increasing. Asia continues to be the growth center for us, and there's challenging headwinds in the US, but still lots of opportunity if you can break through. And there's also tough trading conditions in the UK and Canada. So was there any more questions?
Yes, there is. So
yes.
Questions came through on your regional slide.
Yes.
Is there a reason why Hunter Valley was not included?
It must not have come up in the top. I didn't do that on purpose. It must not have been in the top few, but if you want that sort of data, I can give it to you. So that's fine.
Cool.
Yep.
So that brings me to the next question. A number of people have asked, can they have access to your slides? So even though they get sent a recording, sometimes they like the presentation as well. You're happy for us to share
I'm happy
that?
with that. That's fine.
Cool. Well, unless anyone's frantically typing questions, whilst we're changing the guards, so to speak, I can also call out questions to you while Anita's taking the chair. But thanks so much for your presentation.
No worries. Thank you.
Good afternoon. I'm Anita Potter. I work as Corporate Affairs Manager with Wine Australia. Since the rather tough start to 2020, I've been handling a lot of inquiries to do with the fires around the eastern part of Australia, and we thought this webinar was a good opportunity to kind of let everyone know what the state of play is. The reality is that the fires in New South Wales, Victoria and South Australia have had pretty severe impacts on some individuals, some businesses and some regions. But overall, they have affected a very small part of Australia's total vineyard footprint. So out of the 146,000 hectares or thereabouts, less than 1% of vineyards have actually fallen within the fire footprint. And we determined this in the beginning of January by taking the National Vineyard Scan, which we first produced in 2018 and recently reproduced for 2019, which locates all the vineyards across all Australian GIs and vineyards outside GIs. But it locates all the vineyards, and we then took that map, and someone clever in the market insights team overlapped that with the fire footprints produced by the fire authorities in the 3 states to give us an idea of what vineyards fell within those fire footprints. And what that told us was that a maximum of 1% of vineyards were exposed to fire. And I say maximum because, as you would know, when the fire authorities do those fire footprints, they're broad footprints, they're kind of external boundaries, and within those boundaries not all the vineyards would be affected. Some were lucky enough to escape, others were not so lucky. So we know that it's a maximum of 1%. So those vineyards, perhaps the worst affected region in terms of vineyards that suffered fire damage was the Adelaide Hills, but Tumbarumba and in northeast Victoria, there were also vineyards that were damaged by fire. We haven't got exact figures on what the extent of damage actually was, and that's partly because it's hard to assess damage immediately. Heat impacts from fire actually look very similar to vines killed by fire. The vines wilt, and you have to wait and see what recovers. So from previous experience, we know that it takes up to 2 months to get an accurate assessment of damage to vineyards. Hence, we're still collating that information. Beyond the fires themselves, obviously the main concern is to what extent we've sustained damage through smoke exposure? Again, the answer is we're unsure at this stage. We know that the hunter has had severe damage to grapes being affected by smoke, and a number of wineries have announced that they either won't be picking or will have substantially reduced tonnages because grapes have been affected by smoke exposure. We know, because we've been doing smoke research since about 2003, we know the critical factors in smoke exposure are proximity to fire, how fresh the smoke is, duration of exposure, and how close the grapes are to veraison or becoming ripe. Hunter kind of copped the worst of all three factors. They were close to fires, they had extended duration of pretty dense, relatively dense smoke, and they were the region closest to veraison. Other regions that were affected by fire, for example, King Valley, the Adelaide Hills, Tumbarumba, being cooler districts that normally pick much later, it's harder to provide an accurate assessment of what the level of exposure in those regions were. Certainly in the Adelaide Hills, the duration of smoke exposure was a lot less than in the Hunter Valley. So everyone's got their fingers crossed there. Similarly, in the Tumbarumba region, there are early reports that quite a bit of the vineyard area in Mudgee is showing high levels of those compounds associated with unpalatable flavours, and people are having to make some tough decisions there yet, but we don't have a hard quantifiable number. People have asked us whether we can produce nice tidy maps the way we have done in fire maps, and it's just not possible. There are a number of reasons for that. One is that while you can measure smoke exposure and the wind direction to assess smoke exposure during fires, geography and also time of exposure. Some sites in valleys, the smoke stays. Other sites that are more exposed, the smoke moves on and doesn't affect the grapes in the same way. So we're not confident about trying to draw nice, neat boundaries, because there will be some vineyards that suffer more than others within boundaries, as they're finding within the Hunter Valley, that it's almost a vineyard by vineyard situation. So that's where we're at. We've had an incredible amount of international exposure through the fires, and certainly the international wine and liquor trade has followed that up. There's been tremendous support from a lot of retailers and wholesalers in trying to provide support. There's also been an enormous amount of misinformation, but at the heart of what we need to get out to the world is the fact that a very small number of vineyards have been affected. The regions that have been affected are actually relatively small exporters. They're relatively small in production scale, although that's not taking away from the fact that there's some individuals and businesses that have taken pretty hard hits and will take years to recover. More broadly, the issue of smoke, don't want to be punny, but it's still in the air. It'll take a while for that to sort itself out, and we'll have to get a lot closer to picking in affected regions like Adelaide Hills to be able to draw more conclusive estimates of what might be affected. But overall, we believe that the impact caused by a combination of both fire impact on vineyards and smoke exposure and damage to grapes is likely to be less than the normal sort of production vintage variations you see year to year in Australia. So overall, yes, there's likely to be an impact, but we think it'll be very small and less than annual seasonal variation. Any questions?
Yeah, there is a question that's come through. The 1% of Australian vineyards, do you have any figures on the regional impact? So what is the percentage across each region?
We haven't done that by percent. We've got actual footprint within regions, but we didn't want to convert that into percent because at the moment we're just talking about vineyards that are potentially damaged rather than actually damaged. The departments of primary industries in the three states, Victoria, New South Wales and South Australia, are all doing assessments so that government support can kick in for affected vineyards. And Wine Australia and the state agencies or state representative agencies have been waiting on those surveys to be completed, because the last thing we want to go out and do is hit people up with another survey on the same subject when they're struggling with the day-to-day realities of how they're going to get their irrigation systems fixed to get the vines that they've retained through summer. So at the moment we're stepping back a bit and letting the regional departments of ag or primary industries do the surveys and waiting for those to come back through.
Awesome. There doesn't appear to be any more questions unless people are frantically typing, and if they are, I'm sure that we'll just stay with me. Stay with me. I just wanted to thank both and Angelica and Anita today for their time and for their wonderful presentations. Wine Australia are really great partners for WCA and present awesome information to us regularly. So I appreciate your support very much. Thank you. That's it for today's webinar. Thank you for all of everyone who participated. It's great to see such a wonderful number of people. There's a question come through saying thank you from a viewer as well, so that's not lovely. WCA's next webinar will be held on the 10th of March. Please keep an eye out for the emails and or our website for details on that presentation. But until then, I hope you have a wonderful month and we will see you in March. Thank you.